10, 9, ignition sequence start, 6.
Hello, and welcome to Rocket Fuel, your daily update of everything that's happening in the Rocket Pool community. My name is Wack. Today is November 24th. Happy Thanksgiving to those of you who celebrated yesterday. I missed yesterday's episode, of course, but I'm making up last Friday's episode that I missed today. So, yeah. Anyway, there's been a whole bunch of stuff that's happened, and it starts here from a couple of days ago where Langer's popped into the options draft thread that Val created last week, and he came out guns blazing with lots of ideas. So Langer's here says, I had a workshop with the team yesterday morning on these options. Here are our thoughts so far. Sorry for the wall of text. So he said, there's some goals. What do we actually want from this? We need to look at the safety and we need to look at the product itself. So he says the main obstacles are we want to increase the capacity to mint our ETH. We need to attract more node operators and ensure that they do not stake with Lido. And we need to potentially compete with Lido on LST yield. This is extremely hard for many reasons, but I leave that here as I believe it becomes important that we solve the supply side issue, supply side of the equation. So he says here's some characteristics. So he says to meet those goals, we need the following characteristics. We need safety, which is reliable MEV theft resistance, and as trustless as possible, ideally totally trustless. And he says with the product, we need ETH only deposits, potentially comparable node operator rate of return of investment to CSM, so like the rewards to be similar to working with Lido's community staking module. And then he says increased our ETH capacity, ideally lower the barrier to entry to 4 ETH, and ideally the system be easy to explain. So those are aspects that go into the product part of it. So then here, the first idea is LEB4s. So they said, Langer's talked about LEB4s last week, and or like right away, people were talking about like, the question is, do we want Rocket Pool to grow now, or do we want Rocket Pool to grow in a way that puts us in a good position to where Lido CSM and other staking services will be in a year's time? So the idea was that LEB4s, putting them out now, will have limitations, will have some roadblocks that might hurt us in some ways going forward, but they'll help in some ways too. So here's what Langer says about LEB4s. He says, in our opinion, the LEB4 options do not achieve the goals from a safety or product perspective. This was highlighted by Valdorf's LEB research and return on investment comparison. We could use negative commission to strengthen LEB4s, but using the current mini pool architecture, it stops us from employing a non-linear bonding curve. And then says node level collateral with ETH bonding curve. It says this option gets us much closer on both fronts. The outstanding issues are how do we prevent MEV theft and what do we do about RPL? And then with MEV theft, it says with node level collateral, it gives us the ability to better penalize, but there are downsides to the approach. Specifically, it excludes small stakers, so people who bring less than 10 ETH, because you need more. The more ETH you have, the more leeway we can give you, because we can penalize you at the node level. Whereas if you just have one validator, then an LEB4 might not be helpful, whereas 3 LEB4s should be fine, or an LEB8 and an LEB4 should be fine as well. But that's kind of like where we need to figure out where those lines are. So anyway, he says Valdorf's LEB safety research details using negative commission, which is extremely elegant but also has potentially significant downsides, particularly for small stakers. So his Valdorf's conclusion is to use a hybrid approach, which is a good approach, but I'm very mindful of keeping things simple. See, the thing about keeping things simple is that we need to be able to explain the big ideas of Rocket Pool within a minute or 2 minutes, you know what I mean? And in a way that people can kind of track along with. Currently, it's like, you bring your ETH, you bring your RPL, the protocol brings its ETH, you stake it, you get rewards, everyone gets rewards. It's a good time. Like, it's really easy to explain. Whereas, if it's like, you bring your ETH and then the more ETH you have, the way it works like this, and then with it can get really complicated really quickly, which kind of means that you lose some elegance or simplicity, which is very attractive for lots of different reasons. Then the next section Langer's talks about is the RPL bonding. He says it's pretty clear that we need to remove RPL as a mandatory bonding mechanism, replacing it with another form of protocol value capture. We agree the no RPL bonded megapools proposal seems like a good starting point. We would like to suggest that RPL still remain a collateral at risk in some way. One reason why you get the additional commission is because you are providing additional insurance for your node. Also, having RPL as a collateral may be useful as a way to as we remove ODAO duties. This is potentially a need for RPL in the crypto economic mechanism for transitioning ODAO duties to node operators. So basically, if you have RPL staked with your node, then you will get you take over those ODAO duties and get rewards for those. But this at the moment, everything that's being said here, this is very, very, very early in the idea stage. There's no set, decisions being made right now. There's going to be a long road of discussion, modeling, ideas, like all this kind of stuff that's going to come up in the next, weeks and months. Then here Langas finishes his post, carries on with his post by saying the next steps. He says, my suggested research analysis next steps, but happy to hear other people's opinions. And he says, how does non-linear ETH bonding with no RPL affect protocol tail risk exposure? What does the new protocol value capture mechanism look like? How reliable can MEV penalty systems be? How bad can the negative commission be for small stakers? Are there ways we can allow small stakers to use the smoothing pool safely? We would be happy to provide support for GMC bounty for any of these. Clearly the GMC would still evaluate value for money, but we would be happy to express their importance to the mission. I think this is quite key, that I'm going to talk about that in a bit as well. And then visually says, if you're a visual learner like me, here's a mind map diagram thing. It contains some thoughts that I didn't want to add to the wall of text. So if you have a look there, there's like different aspects of the protocol with different options and like the research that can be done, and then there's like MEV theft and stuff. So here we have ETH bonding, RPL bonding, MEV theft, commission, and some different options that are kind of being floated around right now, and some different models and the way that it might look. So Valdov here, says, I have some quick thoughts on next steps. So he says, this is a plot from my document, assumes that node level ETH collateral and forced exits. Also, all node operators are thieves and relatively high MEV market is used. So you can see that, as a percent of total value lost after applying penalty and the penalty amount, you can see that as the penalty amount goes up, the percentage of value lost goes down. So Val says, yeah, let's brainstorm. And then he's saying that there's people, who it says the rocket theft work definitely struggled to be decisive with things in the current state. My previous suggestion was that node operators simply prohibited from proposing vanilla blocks entirely to make this problem dramatically easier. Because right now, we still aren't punishing people for making local blocks, which was the idea that we would be doing, but we haven't started that yet. And then he goes on to see that I believe the median small staker would literally lose money. We can do the math, but I think it's broken. I think it boils back down to theft detection. Like he was replying to the points from Langas with the next steps over here. So then Noshua kind of got involved in replying as well. Oh, actually, Valdov, was still. The orange boxes in the image seems to be like the team's preference. But then here, we had Valdov with more ideas saying, reimagining large block theft like this thread is worth considering too. Essentially uses theft detection for a portion, but allows the positive tails to be considered node operators. We don't have math for this done, but the source data should be similar. And then there was some like discussions kind of going back and forth. Here Valdov said, I had if we change the bonding to 5.5% RPL bonding instead of 10% like we have now, we could kind of exceed Lido's rewards. And I think I covered that on a previous episode where I talked about this. I think that was Monday's or Tuesday's episode where I talked about this. So then Noshua says, I believe the fact that RPL isn't earning yield makes the 10% minimum like a 10% protocol fee only approximately correct. In the more extreme, the less as in lower ETH, higher share of RPL, the less accurate it becomes. So then yeah, here Nosh was like kind of thinking through the numbers. He says, I hadn't quite put together the impact of Lido CSM using ST collateral and yield. Hypothetically, if we go with no RPL bond and some form of protocol fee, we could be competitive with 6% commission for node operators, which would leave 4% to 8% for the protocol at 10% or 14%, depending on how we work out the numbers. So this is actually like one of the interesting ideas that was kind of being pushed through, where, you know, currently our ETH holders pay node operators 14% commission. Well, the way that could work is, you know, with no RPL involved, you could just pay node operators 6% commission, and then between 4 and 8% could go to the protocol in a way to kind of divide it out, depending on what we set the commission level at. And then there's been, like, you know, Jasper made some points about how we could give node operators, like, you know, 6% or whatever, and then we could also give the RPL token holders a certain percentage of that, and then we could give the PDAO and the ODAO another percentage of that and kind of break it down that way. So there's already some really interesting discussions that are coming up around that, about how that might look. Here, another, like Val here says, you know, that another interpretation is they get 7.5% on 32 and also 90% on 4, but you need to get clear sources. So here, Langers was talking about MEV theft and staking tail risks. He says Ken's research was giving details of what things might look like in both in a 4 ETH plus 1.6 ETH of RPL and the 2 ETH plus 1.6% of 1 ETH of RPL. It says, and how that meets some of the requirements for tail risks. He says, I'm assuming that the bonding curve of 4 ETH plus reduction to 2 ETH is fine, but would be good to have a one pager that says that. Again, I'm assuming 4 ETH plus reduction to 2 ETH, but I'm open to discussions on that point too. So it seems like that's what it might start looking like, is where, you know, if you have one validator, it might be either 8 ETH or 4 ETH, and then as you add further validators, they'll be bonded at LEB2s. Basically, you'll get access to unlocking those LEB2s, and we just need to find out how to do that safely. So here, you know, people were kind of giving ideas back and forth, and continuing, and then Langers kind of gave another longer answer. He says, you know, for the protocol value capture based on this proposal and numbers, arbitrary at this point, and then there's a link. He says that node operators stake ETH and optionally stake RPL. There is no longer a connection between the amount of ETH staked and the amount of RPL. There's no minimum amount. He says node operators who do not stake RPL receive 6 ETH commission, 6% ETH commission on the rewards they generate from liquid stakers. Node operators who do stake RPL receive 6% ETH commission and an additional 4 or 8% commission. He says, just playing off Nosho's numbers, and depending on the target ETH commission rate, whether that's 10 or 14%. He says, not sure what the minimum amount should be to receive this commission, but ideally it should be consistent over time so that we don't replicate the current issues with monthly collateral updates. And then he says, I suspect that the amount that people receive from the commission will be lower than what they earn today from inflation. But if we also reduce RPL inflation down to, say, 1.5%, this may make up for the difference. So what Langers here is saying that, you know, right now you get rewards, say 8% RPL rewards. However, 5% inflation is happening. So your real rewards are closer to 3%, or maybe even your real rewards will be negative if we get enough people staking, you know, if it goes below 5% rewards in the current system. So in that real sense, you know, if the inflation goes down to 1.5%, which would probably be used to, you know, pay for some money would go towards the ODAO, some money would go towards the PDAO, for example, then you can lower the amount that goes to RPL holders, and that still would be comparable to, you know, what they're getting now, or maybe a little bit less in real terms, which is quite interesting. And I need to make clear, right, like, these are all just ideas right now. People are just kind of putting forward. It doesn't mean that, you know, we've come up with a magical answer right now that balances all the different things, but this is what people are actively working on, and that's what's like the really interesting thing to like focus on. Then here, you know, we have Langers kind of going on and saying that I suspect they'll eventually have a large ratio of non-RPL staked node operators versus RPL staked, so there'll be a larger share of commission going to staked RPL node operators over time. I know there's been discussion on RPL inflation reduction, so please fill me in if I'm missing anything. So this is actually a really interesting thing as well. So as you get those non-RPL staked node operators who are just getting 6% of the ETH commission, then the rest of that, there'd be more to go to other places because they're not taking all of it. If it's set to 10% of the protocol or 14% as it is currently, then there'd be a big chunk of it that can be used to promote different kinds of behavior, including staking RPL as an option, not just mandatory the way it is now. So then, here Langas goes on. He says RPL 1.5% RPL inflation, I believe, is current PDAO allocation. So we could continue to fund the PDAO via that mechanism, which is really interesting because we want to phase out the ODAO. So that then there would be very little going to the ODAO, maybe nothing going to the ODAO. The PDAO would still get money for IMCs, GMC, all that kind of stuff. And of course, that's in RPL. So if the RPL price goes up, then that money goes a lot further. We can do a lot more with that small amount of inflation. It says staked RPL is still used as governance voting weight, so there'll still be that element attached to it. And it says staked RPL is still used as collateral insurance. We're keen to keep the nature of RPL as similar as possible. So the same kind of ideas that RPL is used for now, we'd like to, Lang is saying that we'd like to keep that, but of course, with some changes in the way it works. It says random thought, if RPL gives you access to yield, it probably makes it easier to price on the ETH yield basis. So that's another thing that someone can kind of model out and see how it works. Says it would be great to model this out so we can play with the numbers, maybe based on our current node operator set, assuming everyone is RPL staked node, and then increase the ratio of non-staked. So that's some interesting ideas there as well. So then, we had non-fungible Yoakum, Waldorf, Langas, of course, was still around, and then Jasper came and started offering some comments as well about room to play with the commission inflows from non-RPL stakers. He says we can keep the commission for the pool low and make our overall RPM more competitive, or we can implement a protocol consistent commission and pocket the difference. And he says I'm leaning towards the former as we await a universal variable commission spec. So that's another aspect of it that could impact how these rewards are divided out as well, where if we have a whole lot of demand for our ETH for some reason, then we can charge them more commission. We can charge more commission to node operators to come online. However, if we've got a glut of node operators and no demand for our ETH, then we can reduce the commission for our ETH in a way that makes our ETH a more attractive product, and more people will then start using it, and some people might not want to be node operators anymore because the rewards don't make sense for them. So with having a universal variable commission, then that just becomes another layer on top of this that kind of needs to be analyzed as well. So here we've got layers upon layers of variables, and finding that magic way of getting the Rubik's Cube completed is going to be really difficult. But the fact that we're already thinking of these ideas and these different perspectives and different factors, I think is really encouraging, and I'm so happy that this is happening, right? Because the team, on Monday's episode, I was talking about how I was so proud that the team's kind of stepping up and getting involved in these discussions. And now not only it looks like that wasn't just a token kind of signaling, do you know what I mean? It was actually a serious intent to get down into the weeds and really talk it out and think through all these different ideas and try to figure out the best course of action. So talking about Langas saying, I think a universal commission is a great idea, probably what it should have been in the first place, and then giving more points. And it says Waldorf says it's nice that you can kind of separate the two ideas of RPL on one side and different kinds of reward structures, and then commission on the other side and different variables. And he says we want to balance different parties. So he says I'm absolutely out for considering a method that balances all parties at once. So he kind of explains the different parties that are kind of involved in the Rocket Pool system right now, and how it might change in favor of or against some of those members. So this is, we have our ETH holders, we have node operators, and we have the protocol itself. So this is currently the commission moves the balance between our ETH and node operators plus protocol. It says minimal RPL bond as a percentage of borrowed ETH moves the balance between node operators and protocol. Since we have three parties, we need 2 degrees of freedom. That can be two 1D solutions or or a 2D solution. So there's different ideas of how things might get moved around and how things might look. So there was a whole lot of discussion going on, lots of different people getting involved, which I am absolutely so happy to see. One of the things that Val said was, like, if we get LEB2s with the same bond offer and return on investment of 1.7 times solo versus Lido's 1.425 times solo, but then you have 45.2% RPL exposure, which might be big oof. And I replied by saying, I'm happy to have that level of RPL exposure. And I said, I'm sure there's dozens of us out of like the 3,000 node operators. So this was what I said. It was like, if we can write a few bounties and put it to the GMC, we can have teams of community members or whoever basically wants to take those bounties, and they can crunch data and get different models. I said we can incentivize quick turnarounds heavily, and we can set up small committee to evaluate the quality of the work to make sure we're getting our worth. And I said I know someone on the GMC who would probably strongly lobby for these bounties to be approved. Like, I don't know who is on the GMC, but we can deal with that. But the idea that I was having was like, we've got a rewards period for this current grants round, which will be ending on, I think, December 7th or December 8th, something along then. So if we can get a few bounties written between now and then, the GMC will decide on those bounties around Christmas. We could have the people who write the bounties say that, if the results of this bounty are provided by January 31st, and provided they meet certain quality guidelines, we can even set a bounty for coming up with like a tokenomics analysis committee or something that, we pay a bounty for members of that. So people can kind of dig into it. And we can say, if you do this by the end of January, if you get us the data by the end of January, the committee can have a look at it and we can give you a bonus if you provide good data quickly. Those are the kind of things that I think would be really interesting to see how that works out. But this discussion here, like, Evan, IB1 Gymnast, says that Miko from Diva is working on a non-linear bonding curve for their protocol. He says would recommend reaching out to him for some cross-pollination, and then Langus says have a call with him tonight. So these are the kind of things that are already happening, and like there's discussions that are happening behind the scenes that I think, us on the more decentralized side of the spectrum of LSTs, we're banding together and kind of like helping each other out, come up with like good ideas and sharing ideas as well, because the main problems with Ethereum staking are Lido concentration, central exchange concentration, and if we can make products that are good enough to take away from Lido and from centralized exchanges, then that's going to be a huge win for all of us. So I'm glad that people are working together on that as well. So here Evan says, not that my opinion means much, but if Rocket Pool wants to maximize for market share, probably the best route would be to somehow eliminate RPL as a bond requirement, as you explored above. As a weird creative solution, maybe there's some way for the RPL token to be bought out by the protocol over time or something. Good luck rooting for you guys, of course. Side note, are you guys trying to work a biz dev angle with this, with potential staked ETH TradFi players? Because that might be a good expansion system as well. Evan's arguing, where he says ETH would be a great product for TradFi players to get their hands on in a staked ETH ETF product, so institutional players would only have to worry about custody and not about staking infrastructure, which would be amazing. So I bet Lido is thinking ahead about this as well. So, then we got Ramana coming in and talking about give more to the committee via GMC bounties. Halzen, Noshua, a whole lot of people like Epinef, of course, turned up as well. So there were some really good ideas. Like, I just don't have time to go through all of them, but because there's like literally hundreds of comments here, if not more. But really, please turn up. This is I don't mean to be hyperbolic, but it could be construed as a matter of life or death for Rocket Pool and for LST and for solo staking. So we're taking this really seriously. We want you all to be involved in the discussion, whatever your perspective is. There's no dumb questions, there's no dumb ideas. As long as you don't mind some snark, if in your ideas getting shot down. But please, come, bring your enthusiasm. We need everyone to be involved in this, because we all have RPL bags pretty much. And, we want to make sure that Rocket Pool, of course, survives for the sake of Rocket Pool, but more so for the sake of Ethereum, because with the way that Lido's going, there's some really potentially scary consequences here. So I'm really happy that, people from Rocket Pool are taking this seriously, people from Diva are taking this seriously. I'm sure if other decentralized staking services want to get involved with this, like, people from Stakewise or Stader even, they'll be welcome. Like, everyone will be welcome to come and kind of partake in this work to make all LSTs better. So this is definitely something that is interesting, and like I said, there's a whole lot of discussion going on here that you can tap into and get some ideas about. So Ramana here is already coming up with one draft RPIP, or I guess some kind of a draft for some work to burn some RPL. It says add as a mechanism for burning RPL to improve RPL utility and close the loop on token issuance. So he says, there's RPIP for adding a mechanism to node operator to burn RPL to temporarily access higher commission. So the people in trading were already kind of, providing feedback and criticism of this idea. But the fact that, people like Ramana and Looking for Owls are already kind of working on some of these ideas is really encouraging. So wonderful to see that. Okay, moving on from there, like we covered up for 25 minutes. We've got this bi-weekly update dated November 21st. So Mav put this out a couple of days ago. And he said that, the RPL, the RETH amount has increased 1.4%, and there's growth of 37%. Mini pool count has grown 2.3% to 25,800. Today, we actually hit 26,000 active validators for the first time, I think, or we hit that amount again. And then node operator count increased 1.2%, annualized growth of 32%. So that's all good. It says smart node version 1.11.0 is now live. Recommended update for all node operators. With R&D, we got the roadmap Medium article was published. Consensus Diligence and Sigma Prime have commenced their Houston audits, which was some of the key information that came out of this update, which was really great to see. And then we got the new website, of course, that came out as well, that we talked about on Rocket Fuel, and a strategy session for potential future protocol upgrades, which is what we just spent 25 minutes talking about. He says governance, there was discussion and polling on RPIP 35, 33, 31, 32, which we already talked about on Rocket Fuel. It says there was improvements to the bounty system were proposed. GMC closed round 6 and opened round 7 of applications. The GMC 2-year members were announced. Year 2 members, sorry. Miso Finance proposed a Rocket Pool loan marketplace, which we talked about. Largest PDAO report, the latest PDAO reports and budgets were available. And then we had integrations with Moonwell. The Yearn vote went live. I think that may be live right now, actually. I'll check out what that's looking like tomorrow. On Monday's episode, where we stand with that. Then with RETH can be used as collateral and compound. Index Co-op's DS ETH has 0 fees, which is a nice little boost to income there. Then there's information about Nocturne featuring RETH, and Notional about integrating RETH in their version 3 of their software as well. And then we had media marketing. So we were in Today in DeFi, the coverage of rapid TVL growth with BTCTN and RETH's high trading volume on Defiant News. And then Rocket Pool was mentioned in content covering potential ETH ETFs. And then, we had information here as well about DeFi protocols, created content highlighting opportunities for RETH, which was really cool. That was, from Metronome, Pendle, Silo, and PancakeSwap. And these guys are getting some of these are getting a lot of ARB tokens. So they're really leaning heavily into promoting RETH liquidity and rewards for that. I mentioned that a few times in Rocket Fuel as well. And then there's Miso Finance. And then there's in real life attendance included Australian CryptoCon in Melbourne and several events that happened in Istanbul. And then RPL was listed on a new exchange as well. But of course, do your research. I think that was CoinMetro. So that was great. And just as we get the bi-weekly update, then we also have a community call. So Sneaky was kind enough to provide a summary of this of the call this week, and he said that the audits kicked off in the past Monday Australian time, so 2 audits are running in parallel. Those are with Consensus Diligence and Sigma Prime. He says lots of documentation was provided to the auditing teams, and they've asked no questions so far. And the main thing that's being audited, of course, was the RPIPs that we discussed a couple of days ago, which is on-chain voting, RPL separate withdrawal address, use stake on behalf using ETH, and also something else that's slipping my mind right now. It was something with time. I don't know, it's slipping my mind. I think that was RPIP 35. But anyway, then it said there's a third audit that's planned for early January. In addition to taking security seriously and due to the complexity of the thing that's being audited, part of the reason for the third audit is the team wanted to add another auditor to the teams of auditors that have gone through the code. So they just wanted to have a look at everything, make sure everything's looking okay, because the previous Atlas upgrade, I think, was only looked at by 2 auditors. So having a third auditor will just make sure that everything is hopefully tight. So here there's orange mode for the new Rocket Pool website is being discussed, considered in addition to the standard light and dark modes. Orange mode would be great, just so we have that radiant orange coming from our screens. I think a whole bunch of us would keep it on orange mode. And then Obol will be an upcoming guest to talk about DVT. And then there was some like a leak of some information about bi-weekly topics that we talked about. So thank you to Sneaky for providing that update. That was really helpful. Okay, let's go back to the Discord now, and we can see that we had the snapshot that took place a couple of days ago. However, Noshua noticed something that was kind of off, that not many people really paid attention to at the time. And he says that Etherscan, who's one of the ODAO operators, got a different route, and Rocket Pool's number 2 ODAO node got a third solution. So there's some discrepancies with the trees that were being generated. And he says you could tell by the number of ODAO submissions before consensus was reached. And he says I was surprised nobody brought it up yet. So basically what happens is, the trees start getting generated by the ODAO members. It's a rolling record, so it all happens quite quickly now. And we need 9, I think, 8, 9, 10, something like that, half of the ODAO plus 1 to agree on the tree generation before the rewards get sent out, because that's the tree is used for calculating the rewards. So normally what happens is that everyone runs the code and everyone comes up with the same number. So the 9 submissions, I think it's 9 submissions that take place, they all match each other and everything is good. However, this time we had 11 submissions because 2 of them didn't match, and the 2 that didn't match were wrong for different reasons. So Etherscan and the Rocket Pool number 2, they got 2 different solutions that were not the majority, so the others went through, and that's why the rewards happened quickly. But there was a little bit something to kind of like look at it a little bit more. So I said, hey Noshua, anyone else who's around who can answer, what was the reason for or the impact of the tree generation discrepancies the other day? And then Ramana said that we don't have an answer. He says he doesn't have an answer. He says speculation is that there's a Prism or Geth bug, or the Rocket Pool node 2 or Etherscan are using an old version of the smart node. And Noshua says, I don't think anyone's looked at too closely, but most likely something like what Ramana just said. So that was here, Ramana as well said that there were 2 different wrong trees, so that was kind of unusual there. But I was just teasing Butter here, saying that it was the Beacon Chain node that had the wrong information, but it was actually Etherscan, like we just said. So if we ever get to the bottom of that, I'll definitely let you all know. But at the moment, it might just be like a quirk, and it might be there's a bug on one of the archive nodes, or they weren't using the most up-to-date smart node stack. So those are potential issues there. Okay, next we are going to talk about this tweet from Kaiji, who had an interesting perspective, and I'm wondering how this might play out. So Kaiji says that RPL is next to get Binance Futures. Now, Binance Futures is like a perp product where people can use futures on Binance. Of course, FTX was famous for this, and there's some other protocols that lean onto perps as well. And Kaji is saying that ETH is strong at the moment, and LST's tokens are strong as well. So he says RPL is the second biggest LST platform behind Lido's LDO, and only has Bybit perps at the moment. There's no Binance perps. So the Kaji saying that perps have to come for RPL, right? So here they've got a couple of charts where they're showing that, there's a lot of things that both Binance has and Bybit has. However, the RPL futures is something that Binance doesn't have. So maybe they will turn that on soon, which I think would be really interesting. It might give us a big boost of volume for RPL trading, but I think it might also open us up to some forms of manipulation. I'm not exactly sure how perps work. I really should learn how they work, but if you're curious about that, you can go and have a look at the information. And then here there's a screenshot of the largest LST tokens. So Lido, of course, is number 1, and then we have RPL, that's number 3 behind Wrapped Beacon ETH, which I think is just number 2 basically behind Lido, and then Frax is in number 3, and Frax of course has other things that the Frax token does as well. And then finally we see that there's a chart here kind of showing how the RPL price has fluctuated over time and how it's looking stronger now because it's up nearly 100% from the lows, about 6 weeks ago or something, and how it's setting us up for a move into higher prices. I'm just showing what Kaji says here. I'm not providing any financial advice. Please trade or invest responsibly. Okay, moving on to some other topics here. We talked about Lido's issues with Infinity Stone's node operator and how their keys were probably all compromised. This was the research that Hani Abu shared, and other people have been talking about it a few days ago as well. Well, we got an update on that from Lido, saying what the consequences of this are going to be. He says the Lido say, following discussions with affected node operator Infinity Stones and the relevant security researcher D-Wallet Labs, Lido DAO contributors have come to the following conclusion regarding the previously mentioned vulnerability. So it says there's no indication that any keys were compromised due to the vulnerability. However, as a precautionary measure, Infinity Stones volunteered to exit all validators and rotate to new keys pending a DAO vote. And then they said all ETH from the exited validators will flow back into Lido protocol via the withdrawals process and subsequently be restaked to available keys in the buffer. And moving forward, Lido DAO contributors recommends a forum discussion on the proposed next steps pertaining to the rotation of Infinity Stone's validated keys. And then for more information, blah, blah, blah. So I'm actually really surprised by this because I really thought that Lido should just be like, yo, sorry, Infinity Stones, like you guys didn't take this seriously enough. You dawdled on this problem for 4 months. Bad stuff could have happened. You could have lost 10,000 ETH. If their 10,000 validators were slashed for 1 ETH each, that is a really big deal. If I was in Lido's situation, I would have been like, sorry guys, see you later. But I guess Lido's giving them another chance. So that's up to them. That's their prerogative. But I just thought I'd give you all an update of what's happening with that. Okay, next we have this thread that I made in Discord about Black Friday and any deals that are potentially out there. So I asked people to just throw your deals into this thread so we can all kind of see what's going on. So here Butter was creating a code for Beacon Chain services if you want to use it. Val shared a screenshot of Lattice, a discount on Lattice hardware, and then there were other people sharing information about SSD drives, tax software like Coinly, hardware wallets like Ledger giving free BTC depending on what models you buy, and then TradingView having a 70% discount as well. So there's a whole lot of things that people have been kind of posting into here. So if you are interested in sharing or coming across any like good Black Friday deals that are kind of crypto related, throw them in there so people can have a look and make decisions about buying those products. Okay, and finally, we haven't mentioned Joe on Rocket Fuel for a while. Joe's been off sick. Well, Joe popped into trading a couple of days ago and he said, hey dudes, just wanted to say happy Turkey Day to everyone in the USA. I'm not going to be up when the rewards interval hits because I gotta get up early tomorrow, but hope everything goes smoothly again. Also, Fornox merged his stuff into the Houston branch today and it's really good. I'm just about done and ready for internal testing. I'm hoping this is the last time I ever have to build a Merkle tree. He says, good night, everyone. So, Joe hopefully is starting to feel better and is back to work, but I don't think he's quite up to coming and hanging out with us and trading yet. But I just wanted to send this message out to Joe to say, Joe, we miss you. and we hope that everything is good for you, and we hope that you come out and hang out with us again very soon, because you're awesome. So on that note, I'm going to end today's episode. Thank you all for watching, listening, and being part of the Rocket Fuel community. I hope you have a lovely Thanksgiving weekend, or just a regular weekend, depending on where you are in the world. And I'll see you all on Monday. And next Friday, hopefully, will be when I have the 300th episode of Rocket Fuel. And I'll be talking about some special stuff in trading this weekend, but also on Monday's episode of Rocket Fuel. So make sure that you tune in for that one to see what fun stuff is planned for that. Anyway, thanks all, and see you soon. Bye.